Namaskara. Hearty welcome to Jnanarjane, Empowering Excellence. Friends, Wednesday Study Circle. Today we have a very interesting topic, and it is most relevant and apt topic for the day. That is key aspects on quality audit as per auditing standards. The eminent chartered accountant, he's going to impart knowledge on this. More of a practical aspect is CA Sundaresan. On behalf of Bangalore branch and on behalf of all the participants here, hearty welcome, sir. Hearty welcome to CA Sundaresan, sir. Hearty welcome. Friends, auditing is the news now. So we thought it appropriate to learn more about audit, understand the quality audit, how one can do the quality audit, and give a best of the best audit reports and make it comply all the auditing standards, accounting standard, everything. In that regard, we organize this program. In fact, another program also organized from tomorrow, that is audit quality maturity model. That also is there tomorrow, 3-hour session. So we are taking more interest. People need to take, our chartered accountant needs to take more interest in auditing, as is our core subject. We thought it to have this session today. So on behalf of Bangalore branch, hearty welcome to each one of you. Friends, again on 21st, 22nd, 23rd and 24th, the 4 days we have planned a company law program. Company law, again, a very interesting subject and lot of work opportunity available for all of us. In that regard, a detailed study on 12 hours learning from 1st to 24th, 4 days. So I request all of you to visit bangaloreici.org and register for that program. That program is hosted under the aegis of Company Law and Corporate Governance Committee of ICAI. So very interesting, and expert speakers are going to impart their knowledge. So I request all of you to register that program. With that note, once again, hearty welcome to each one of you. Over to CA Panindra.
Thank you, Chairman, sir. It's my privilege to introduce today's speaker, CA Sundaresan, sir. He's a BCom graduate and a fellow chartered accountant, and also a retired partner from Deloitte Haskins & Sells LLP. He has more than 34 years of professional experience. He has handled audit and assurance services of large listed companies as well as SMEs. He has extensive experience in cross-border reporting for multinational companies under IFRS. His experience is across a wide spectrum of industries like technology, telecom, FMCG, manufacturing, banking, and many more. He was also involved in group audits through Global Shared Service Environment. He has also rendered other services like internal audits, control assurance services, SOX compliance, due diligence reviews, valuations, etc. He is a member of Financial Reporting Review Group of FRRB of ICIF for past several years. He is a regular speaker of professional forum on accounting, auditing, company law, and corporate governance. With this brief introduction, I once again welcome today's speaker, CA Sundaresan, sir. Welcome, sir, and over to you, sir.
Hello. Thank you very much, Mr. Shetty and Mr. Gupta, and for giving me an opportunity to share my thoughts. Okay. In fact, past almost a year, I have not been much doing professional work, and this is actually an opportunity to share what were my experiences in audit for the more than 3.5 decades. The purpose of this talk is not to do a detailed talk on auditing standard. It's a subject for a detailed workshop. What I'll be covering is the key aspects, mainly on practical front, how you do a quality audit. In fact, tomorrow also there is a session on quality maturity, and it could be a precursor to that session. Okay. And I will be going through from the auditing standards. Okay. And from the auditing standard, I will be going through key aspects of various auditing standards, some of the auditing standards, and also some practical aspects where there are gaps and how we need to plug the gaps. Okay. Let me share the screen. Can I start sharing the screen?
Yes, sir.
Before entering the subject, we need to do certain general consideration. What's the scenario where we are in? What's the environment we are there? And what are the things which are happening in the recent past? Okay. Then we will go into the key aspects. Some of them are practically not given importance. Okay. I'm not going to be in very technical aspects of the auditing standard. When you talk of the technical terms in the auditing standard, people get put off. Okay, it's not actually it's all common sense driven auditing standards. When you go across, let me explain what are the key aspects in various terms. Why there is a need of an auditing standards? When all of us are doing audits, there is a need of a consistency. And everyone is actually giving an opinion on the financial statements, and the manner in which the work is being carried out need to be consistent across the firm, across the geography, now across the globe. So what we are having as an auditing standard is actually almost a common international auditing standard with some carve-outs here and there. So our auditing standards are actually a global auditing standards, except for one or two. Now, the added importance in India is the auditing standards have actually, auditing and the accounting standards have actually become part of the company law. We are still thinking it is our institute that's just prescribed the accounting standards or auditing standards. Institute has drafted the auditing standards, and it is a company law which is now mandated the auditing standards. It is essentially, technically, is part of the company law. So auditing standards is now law. It needs to be complied with. So that has an added importance to the auditing standards. The other aspect which we are finding of late in the past few years is external regulations. As you are aware, NFRA has been created for audit or auditing the professionals in respect of the companies which are of significantly higher size. They are the one who are now looking at the accounting standards, auditing standards. They are regulators. So NFRA is a regulator. NFRA is not just chartered accountants. NFRA is a body which consists of bureaucrats, other professionals, a bit of chartered accountants, and everyone. And there is a kind of things when they do a review, when they do an inspection, they don't even look at the technical committee, and there is a lot of ifs and buts on the law in which it is being created. So what's the bottom line of this external regulation is the standards are being interpreted by people who are other than chartered accountants. So that is a bit of a high risk for all of us. Okay, so that is, we need to look at it. So they pick up the standard, some paragraph from the standard, and say, this is what the standard say. You should have done this work. So they are not looking at a holistic picture of the auditing standards. Many times you find the people don't have a practical experience of a related entity or a related size of the audits, and they come and review your papers and review your audits, and they are commenting. Okay, they are regulators. They are not some other peer reviewer. They are regulators. Okay, the regulations mean you can be punished for a bad audit. Okay, it's not even enough to do a quality audit. You need to prove it, because the documentation is needed. We will come to that later, but you need to prove that you have done a quality audit. The next aspect is the businesses are becoming complex. The accounting thereon is becoming complex. If you look at the international or Ind AS standards, the standards are voluminous. To read the standard and to comply with the standards it's a very big exercise. And as an auditor, you need to go through those accounting standards, understand them, understand the interpretations, and then ensure that they have been followed by the auditee. Okay, there are multiple regulations and legislations. You have got Reserve Bank of India, you have got SEBI, you have got IRDA, you have got NFRA, you have got company MCA, and the institute. All are got regulators. They are all regulators, and we have got one professions. I don't think any other professionals He is being regulated by so many regulators. So it is a big challenge. And entirely the main regulation is not in other services rendered by as chartered accountants. It's mainly on statutory audit. The things, one of the important things before I start looking at the technical thing, audit is at the low end of the fee levels. Without understanding this, you cannot do a quality audit. In fact, this has come into the public domain. I was just chatting with someone. The outgoing chairman of NFRA in an interview last week, he has done very what the remarks which he has passed is that they have done an exercise. The minimum fees which is required to comply with the auditing standards and accounting standard for any smaller entity at a medium level of the fees is 1.5 lakhs. That is a minimum fees which is needed to do a proper audit. He has actually mentioned we don't know how the chartered accountants are doing an audit at low fees of a few thousands of rupees. So what it is meaning is this is not some Tom, Dick and Harry. It is a regulator who is an outgoing regulator who is telling the fees is so low, we are questioning whether the chartered accountants are actually doing an audit. That is the question. He has told in no uncertain terms. I would request you to go through that interview, which has come in a week back in Economic Times. Okay, it is a revelation. We are actually need qualified professional chartered accountants to do an audit. The cost of the professionals is quite high. Fortunately, our professional was sought after in the industry. Industry is a pay well. It's very nice. They are not only employed nationally, they are internationally, they are employed. And as an auditor, you need to employ qualified people. You cannot do audit as a teamwork. So the qualified professional costs a lot. Plus, there is a lot of investment which are needed in documentation, in the systems, in what you call IT support, in experts like tax professionals, IT professionals. All of them costs a lot. With this cost, with the fees which you are having, will you be able to provide a quality audit? The first steps I would say is if your fees are so low that you cannot provide a quality audit, better not take an audit at all. Then the next constraint we have is time constraints. We know how our people are doing bank branch audits. They are just sent something and within a matter of, they give 2 days, 3 days, they have to go to the branch and then give a report. And then they question whether the branch audit is available or not. And then they say, you guys have not done a great job in branch audits. But the underlying thing is how much time is given, how much leeway or planning time is given. We can't even visit the branch. So that is the kind of time constraint works. It's not anything better in big companies. SEBI has got 2 months time for listed companies to finish the audit. Okay. When there's 2 months, the company will take its own time to prepare the financial statement. And what is the time which you get to do an audit? It's very crunched. Okay. So time constraint, it's given. You've got no control over it. With this scenario, we are supposed to do a quality audit. Okay. Now let me get into the paragraphs, the standards straight away, because we need to know the standards. Standards are not many, they are all based on common sense. I will try to make it as simpler as possible. I will not use very technical term. You can go and read the standards. We need to comply with the standard verbatim these days because they pick up this paragraph and say this paragraph is not fulfilled. Any work which you do is not going to be effective or efficient unless you plan the work. It's true for any kind of work, and audit is no exception. That is what is required as per the standards. A planning, there are 2 standards, SA 300, SA 320. Now, what exactly you are trying to do a planning? Now, invariably, you will also find when an audit is there, the accounts are prepared, you send your team for audit, they straight away will start doing some testing. That's not the way to do an audit. Audit require a detailed planning involved at the senior level. Planning has to be done at the senior level It has to be top-driven approach from the partner onwards and the senior members of the audit team, whoever it is. Okay. Now, what are the things you will do in the planning? Now, the important thing in planning is to identify what are the significant factors in an audit which need to be addressed. Audit, as I said, it is not, it has to be within a fixed time, within a limited time, with a limited cost. So the standards require you to focus on important aspects. Now, what is important, we will come to it later. Okay. Now, that is the very crux of the planning. Now, for doing a planning, the basic fundamental requirement is the knowledge of the client. Now, if you ask me in 3.5 decades of my experience, what I will cherish a lot in my auditing career is the knowledge of phenomenal knowledge of the various industries and businesses and systems. Because every audit you do, you need to understand that kind of industry, which industry they are, and within the industry, how the entity is doing, what is the business model they are following, and what are the systems which they are employing, both for businesses as well as for accounting. This knowledge is paramount. This knowledge is not only at the partner level, it has to be at the entire team level at appropriate levels. That is very important, because without, we will come to it why it's important. The knowledge without, for instance, the knowledge of various industries is important. You've got banking, you've got telecom, you've got trading companies, you've got manufacturing companies, you've got service industry, you've got in Bangalore a lot of shared service centers of subsidiaries of foreign companies. Okay, you've got smaller MSMEs, you've got medium-sized companies, you've got large entities. So each one of them varies a lot. To understand them is very important to plan your audit. Now, what is important is to focus on important and key areas. That's the crux of the audit plan. Now, one of the important thing is audit strategy. Audit strategy involves identifying the areas where there is a risk of material misstatements. How will you respond? What kind of overall program you will follow? What's your timeline? What's the resources you will employ? Okay, how it will be supervised? How you will be communicating with your client personnel, audit committee, or the finance team in the clients. All of them in the audit strategy has to be documented in an audit planning memorandum. Audit planning memorandum has to be in writing. That has to drive your audit. It's important. The next aspect of the planning is to do a planning materiality. Now, when you look at the entire spectrum of audit or accounting, materiality is all pervasive. We are not interested in checking smaller things, very small, insignificant item. In the same manner, you check the material item. The way you will do an audit of a sale is quite different, where you will do a small minor expenditure. Okay, so that is the error or gap which you normally expect when you do not plan the audit and you don't plan the materiality. So your materiality drives the audit. Because materiality is very important. You'll find out what is a material misstatement. Your audit is expressing an opinion to state that there is no material misstatement. So material is a very important aspect of accounting and auditing. Now, how do you work out the materiality? There is a lot of judgment involved. There is a separate standard on materiality. On what basis? For instance, very simple, like a listed company which is regularly profit making, a small percentage of the profit could be material. What is materiality? Is basically any value, any item which will make a difference to the reader of the financial statement. It could be, say, 2% of profit to 1% of profit or 5% of profits. It could be there. Okay, so it could be even sales. If the company is loss making, you can have a 0.5% of sales. That could be material. It varies. It varies, and there is a lot of judgment which is involved. The important thing is the judgment has to be exercised with due care at the appropriate level and with appropriate knowledge and need to be documented. Okay. Now, the next important aspect of a quality audit is risk assessment and respond to assessed risks. This, I find, is something people feel that's something Greek and Latin. It's not. It's very simple. Now, what happens is a risk assessment. But as I told you, to do a risk assessment, we need a thorough knowledge of the business, thorough knowledge of the entity, how it works, and as far as an audit is concerned, a thorough knowledge of the systems and the controls in place. Without knowledge and understanding, no effective risk assessment is possible. Now, what is the risk assessment which we are talking about? Risk is a word which is being widely used. Everybody talks about business risk. What is the risk is business is prone to? What's the risk is, for instance, the financer, the investor is prone to? So many things. Everyone is talking about risk assessment these days. As far as the audit is concerned, what is the risk assessment we are interested? We are actually interested in finding out what is the risk of material misstatements. Why we are interested in identifying risk of material misstatement? Because we are reporting that there are no material misstatements in the financial statement. So because of that, we are interested in identifying what are the risk of material misstatements. And the entire audit is nothing but mitigating those risks with appropriate procedures and conclusions. Now, how do I, it's all nice terms to say risk assessment. What do I do? How do I do? The simple thing which I have come across is you identify what can go wrong. What can go wrong in resulting in material misstatement or financial statement? Okay, that is the term, that's the question which you need to answer. There are at two levels, at the financial statement level, at one what is called assertion level. Now, financial statement, we understand whether the financial statement profit or sales or something which can go wrong. Now, assertion is something which is very specific, technical for audit. Now, when we are doing an audit test or audit evidence gathering, we are actually looking at one of the assumptions. There are one of the assertions. The assertions, the main ones are accuracy. For instance, when you are verifying a sale or a purchase, you are verifying whether the particular purchase is accurately recorded. Existence. You are recording, when you are looking at a sales, you are actually looking at whether the sales was actually existing or the asset is actually existing. That is called existence. That is the test which you are looking at. Completeness. Now, when you are looking at, say, for instance, your liabilities, whether the provisions which are made are complete, that is, all the liabilities, all the provisions have been made. That is called completeness. Then valuation. We are in Ind AS, even in our own Indian standards, valuation has become important. The value at which it is stated in the balance sheet or at the profit and loss account is appropriate. It involved actual valuation or fair valuation these days. Disclosure. One of the important thing in disclosure is disclosure. We have got our Companies Act for disclosure. We have got accounting standard for disclosure. I will come to you to why disclosure is much more important than anything else in another slide. It is necessary which assertion there is a risk of material misstatement. Let me take an example. Take an example, a scenario. A company is affected by pandemic. The sales during the years are quite low. But at the same time, it's hard pressed to show better results in the finance fundraising. They are into fundraising. And there are other compelling factors. They need to show a better picture. Now, what can go wrong? You are an auditor. The company is preparing the financial statement. They are under hard press to show better results. Now, if you look at the balance sheet and the profit and loss account, the most significant item in the balance sheet and the profit and loss account will be revenue. Revenue affects the profits a lot than any other item. It's a high risk item. Any material misstatement in revenue could be material for the financial statement as a whole. It is a significant item. In the above scenario, what could go wrong in revenue? That's a question you ask. The risk, is it there is a risk of all revenues not booked is a risk? Mean completeness, it is a risk? Not likely. When I am in a pressure to perform better, show better results, the risk is not completeness of revenue. because I will ensure the last pie of the sale is booked. The company as a company, I will ensure that. The risk is possible overstatement of revenue. It is not only possible overstatement of revenue. This happens during the last quarter. It is the possible overstatement of year-end revenue. That is a very high risk of material misstatement, significant risk of material misstatement. So this year-end revenue need to be identified as the high risk of material misstatement. Okay. Now, why it is needed? Your focus needs to ensure much more in the year-end revenue to ensure it is not overstated, rather than in verifying the completeness or accuracy of the sales which are in the earlier years. You need to verify them, but the focus, a lot of focus on the audit time and the effort has to go in risk of material misstatement. Okay, this is only an example. Practically, it could vary. Now, when you identify the risk, the purpose of the audit is to ensure your material misstatement is identifying is not enough. It is actually dangerous to identify something as the risk of material misstatement and not performing proper procedures. So what is important is you need to respond to the risk of material misstatement by performing audit procedures and gathering audit revenue, to ensure that the risks are mitigated. You can conclude at the end of your audit procedures that this risk of material misstatement of year-end revenue is mitigated, and we can conclude that the year-end revenue is appropriately stated. Now, there are two types of tests which can happen. One is test of control, and detailed substantive tests focus to mitigate the risk. Now, I'm not going into details. What is the test of control? What are the things which are involved? Because that itself is a topic for discussion. Okay. Now, controls over the year-end sales and detailed substantive testing of cutoff for the year-end is focused on existence and accuracy. Okay. For instance, year-end sales has to be existence. That should not be a bogus sales. Okay. That is existence. Accuracy. I can misstate the results. Okay. Instead of one value, I can do the X value, I can do 2X values. Okay, I can increase the sale value and then push the next year's sales to the current year. It could happen. So I need to ensure accuracy and existence are being verified. Okay, now this is the risk which you need to respond. Now, all our procedures should effectively respond to these. The essential procedures has to focus on these risks to conclude the risks are mitigated. Now, what are the things you will do in this particular area? You need to ensure your experienced resources have to be involved. It has to be supervised at the highest level of the partner. More time need to be spent on this area. Professional skepticism across the team has to be there. What is professional skepticism? Professional skepticism means that anything can go wrong. Just because, for example, you are auditing somebody for years together and they have got a very good reputation. They are all people of integrity. All these things could be there. But at the same time, as a professional auditor, you need to be skeptics. Still, things could go wrong. Okay. So you need to corroborate everything given by them. Okay, and all the procedures which you are adopting, skepticism should be the background. The common error which we find in this kind of an area is we don't focus on the assertion. For instance, if you go and check whether the year-end sale is complete, okay, you can check it, okay, but that will not address this particular risk of material misstatement. Okay, we are trying to look at the material misstatement or overstatement of year-end sale. Now, when you go and check completeness of sales, that is not addressing the particular risk. What are you checking in completeness? That all sales are booked. In fact, that has not been identified as a material risk in this aspect. So this has to be avoided. This is the fine test. Whenever you have a test, you need to link the test to the risk involved. Does it mitigate my risk? Okay. So you will say, suppose if you are looking at the sales, you will look at it all the year-end sales. The goods have gone out physically. Okay. That addresses risk. That addresses the sale is in existence. Okay. You will not look at the next year's sales to find out whether any of the current year's sales has been booked next year. That you will do, provided if you are looking at a risk of understatement of year-end sales. Suppose the company is doing very well and you are identifying the company is actually trying to understate its revenue to save tax. Then completeness of revenue, year-end revenue, could be a significant risk. So you may have to adopt something different procedures. So this is what is the risk is all about. The entire audit, according to me, is identification of risks and mitigation of risk. Okay. Now, it is important we talk in terms of risks. Okay. Now we'll come to it later. Come to it. What are the things when I gather audit evidence? What is the mistake which we practically made? Before going into the auditing standards, I think one of the things which was very important to at the time of planning, at the time of initial audit itself, is to understand the use of technology. The technology is now all pervasive at the client place, at the accounting and the business level. Now, at the auditor level also, it is important technology is being appropriately used. Okay. Now, why it is important? The technology and artificial intelligence is changing drastically the manner in which accounting is being processed. There are a number of automated entries. There are many systems which are there, which are linked. There are data transfer between systems. There are audit trials which you cannot see it. There could be audit trial which is systems driven. The manual audit trial may not be there. There are remote systems and processing. For instance, a company can have shared services. It's not just only multinationals have got shared services. You go to the bank, your loan documentation is actually centralized to a regional level. Okay, certain functions are centralized at the head office level. Okay, the people are sitting at various other places and they are processing data, and that's how the company's accounting works. There are shared service centers. There are specialized shared service center for payments. You will find all the payments are coming from one location, are approved from one location. Now, how do you audit? You are auditing the entire entity, but shared service center is another location. Okay, shared service center is important. There are a lot of things. The shared service center, the physical document may not go to the shared service center. Everything is scanned and sent. Okay, so it's a new way of working which we are now envisaging, and that has its own audit, or what you call importance, and its own problems, and as well as it's very good for audit also in certain level. Cyber security has become paramount importance. We are all using online payments. We are using mobile payments. You access your systems. You access your accounts. You access your cards through your payments. You have got payment gateways. You've got wallets which are involved. So many things which has happened, and all are through cyber. And there are a lot of risk, and cyber security has become paramount importance in this scenario. With all this scenario, auditor cannot be living in a world where technology is something new to him or is away from technology. There is a significant technical involvement in auditing in such an environment. Even in simple, smaller entities, technology is important and we need to involve technology. Now, use of technology has got two aspects, as I told you, at the auditee level and the auditor level. The next important things of technology is clear understanding as far as focused on automated and manual controls. Now, very often you find, say these entries are system driven. Take an example in a bank. Most of the interest calculations are automated. Okay. Now we have this thing, because it is automated, it has to be correct. You're wrong. Automated controls, there could be automated controls which may not be proper. You need to test those controls also. Okay. So automated controls, the audit trail is something very difficult. You need to have technical knowledge to get into the audit trail. What are the exception reports which need to be there? How the company is actually, or the bank is ensuring the interest is calculated properly. All those things which are needed. If you look at the bank, interest is the most important item of revenue. Okay. It's fully automated. Okay. So it is important, all the automated processes, automated controls or manual controls need to be there. When the whole process is automated, it is highly likely the controls are also automated. Okay. So we need to bifurcate automated and manual controls. Automated controls need involvement of IT audit specialists. You need to plan it. Now, there is a detailed understanding of the system report, those in control and in processing. Now, very often you will find they will say it is automated, but it may not be actually. They may be actually passing entries from a report which is generated, and they may actually pass an entry. Or one system may generate a report, based on a report, an entry may be passed. This is not an automated entry. It is actually an automated, there is a system reports which are used in passing entries. Okay, that need to be understand. What are the control involved is important, and how they are processed important. You need to understand that. Detailed planning of testing of controls and automated entry is very important. Okay, usage of IT specialists and usage of their work by the core team is important. So it is important the core audit team also understands the work the IT specialist is doing. In fact, a quality audit requires the audit team to tell the IT specialist what controls they want it tested and review his work and his conclusion and conclude what is the impact of them in the audit. That's very important. See, audit team also need to be educated in IT and IT controls, how it affects the financial statements and how it affects the audit work. Now, use of technology by the auditor himself is becoming more and more important. We've got analytical tools. We have got fantastic analytical tools which are there. As I told you, something which is automated could actually use by yourself. It's all expensive. For instance, interest. You can reperform the interest taking the data from the bank or a finance company. Okay, you can take the figures from the company and do analysis. Previously, you should have only spreadsheet. Nowadays, analytical tools are available. Planning, all IT, documentation, data gathering. Data gathering can be done through tools. Okay, for instance, we have gone through 2 audits which are done remotely by many people in this pandemic. Those remote audits were possible to a large extent because of IT technology used by the auditor himself. Okay, the auditors were using a lot of tools, data gathering tools, which was sitting in the client system, or the client was taking it and putting in their tools, and the tools were used by the auditor. Okay, the last 2 things, one of the things which is becoming more and more important with IT tools is re-performance. Okay, I'll come to it later in the end, last stage. Okay, re-performance, IT tools could be very, very important for the auditors. What you couldn't do 10 years back could be done now. Re-performance is a strong substantive audit test, because what you are doing, you are performing what the company person has done, so that you are comparing your results with their results and see whether it is same. Okay, and there is no material difference. So re-performance IT could be used. Simplifying and identifying, sampling and identifying exceptions. Sampling, you can use IT to generate random numbers, random samples. You can use identifying exceptions. You can use IT tools. Okay, this is becoming more and common. For instance, if I want to identify say any item which is more than say 5 crores or 10 crores or 5, I can run a tool on the system and identifies those samples. Okay, so that's very important. So when the clients and the companies are becoming more sophisticated, an auditor needs to become sophisticated to perform an efficient audit. These involve, yes, these involve investments, and that's why audit fees, audit remuneration needs to be upgraded first. Let's enter from, with this background, go into audit evidence. Now, gathering audit evidence is actually a predominant audit process, and predominant time is spent in gathering audit evidence. Now, what exactly audit evidence is? The standards requires, basically audit evidence is basically you are doing your audit testing, okay, and ensuring that your work supports the conclusions you are drawing, that the financial statements are true and fair. Okay, I will not talk in that term. I will talk in terms of risk. Okay, that whatever is the conclusion you are drawing mitigates the risk of misstatements or material misstatements you have identified. Okay, it's very important to talk in that language. Okay, the evidence which you are gathering has to be sufficient and appropriate. Or if you want to put it in a different way, the audit test or audit procedures which you are doing has to be sufficient and appropriate for a conclusion. Sufficient talks about the quantity. Appropriate means the quality of the evidence which you are talking about. For instance, if I have a debtor, an external confirmation from the debtor could be a high quality audit evidence. But at the same time, how much of the debtors am I getting external confirmation? If I am getting an external confirmation, I circulate say 100 items and I get only 2 items, which is the norm in India. Is it sufficient? No. So it is not a sufficient evidence. So the process of external confirmation fails. You need to do an alternate procedures. Okay. So that's why every test which you are doing, you need to understand whether it is appropriate and sufficient. Whether it is appropriate is to understand how much that evidence supports your assertion. For instance, confirmation could actually support a lot of assertion. Confirmation can support it is accurate, it is in existence. Okay, the debtors are accurate and debtors are in existence. It may not support the thing of completeness, because suppose if somebody I have missed out a sale to a debtor and I have not recorded, the debtor will confirm a lower balance. Okay, so the completeness aspect may not be supported in terms of confirmation. Okay, so these are the 2 important words which are repeatedly used in the standard: test of controls and test of substantive procedures. Now, test of controls is very important in an audit, because we cannot do a very substantive audit of the financial statement in a big entity or even a small entity. The time taken is going to be very high. Even with that, we will not be able to conclude whether the misstatements have been mitigated. So we need to look at, and the important thing in the Companies Act or other law, it is the duty of the company to ensure and the financial statements are prepared to show a true and fair view. It is to ensure that the accounting standards are followed. And the company is required to have appropriate controls to enable the preparation of the financial statement in a true and fair manner to ensure the accounting standards are followed. So they also, that is the management responsibility, which we mentioned in our audit report. So we rely on the controls and test the controls. Okay. Now the controls is very important, and there are certain key things in the control. What happens? I will come to it later in the next slide. Some key aspect which makes a very subtle aspect. Substantive procedures. Again, it's very important, especially where there are risk of material misstatement. When there is a risk of material misstatement, your test of controls is not enough. You need to do detailed substantive procedures. You cannot identify some risk of material misstatement like year-end sales can be misstated and not do focused substantive procedures. You will be held grossly negligent. Okay, so you need to do substantive procedures, especially where there are risk of material misstatement. Now, the audit evidence could be internal or external. A lot of times we get certain evidence, predominantly it will be internal, which is generated by the company itself or the company's systems itself. So when you are auditing, say, certain things, okay, and the company itself gives a report which is generated by the CFO himself, that's an internal evidence, okay. You need to corroborate the internal evidence with something else. You cannot rely on internal evidence. It's like this: they give a report, their figures are there, you tick the figures, tick the sales or purchase from their report. Is it sufficient? No, it's not sufficient. You need to corroborate the evidence given if it is internal. External evidences are more reliable depending on where it is received from. For instance, a bank confirmation could be a reliable thing, but our history of frauds in bank confirmation, even the bank confirmation, need to be corroborated to ensure that they have been received independently, they have been received directly, and there has not been any fraud in transit of the information to us. Okay, there are things which we need to do, which we are not doing in the past, but the frauds have taken place and need to ensure that it is done. Okay, now independent corroboration. Skepticism requires independent corroboration of whatever you are receiving from the clients, however reliable they are. That is what is important. An auditor needs to corroborate. Now, what are the processes which are involved, which are all there, which is there? Now, these processes need to be employed effectively and efficiently depending on the item which you are auditing and the assertion which you are trying to fulfill. Okay, each one could be important, each one will be effective in a particular space. Now, if you are looking at physical verification of this inventory or physical verification of the fixed asset, the best thing is to observe how the client is doing. Now, even in the pandemic time, we have done observation of physical verification to remote cameras. Okay, so it's a very interesting thing which are developing. Okay, now my friend came out with the software to ensure that the cameras are from that place where the physical verification takes place, not from some other place. So he developed actually a program. Okay, so observation is important in that area. External confirmation is very important in respect of certain transactions and certain balances like debtors, bank balances, creditors. External confirmation could be there. If you are auditing a bank in financial, if you're auditing, say, foreign exchange department, the external confirmation from the counterparty is an important evidence for transactions. Recalculations, like calculate anything which is there in your things which have been tested. Calculation could be important. Reperformance, important. Analytical procedures. This is the future of audit. Analytical procedures, there is a phenomenal opportunity for using IT tools and artificial intelligence to do analytical procedures, which were not seen before, which are not there in the textbook. I can tell you, I used to audit a certain, say, NBFC or a bank. We used to actually analyze the data so much to give exceptions. We used to reperform their interest calculation. There's a huge data, but the IT tools enable us to ensure that you can do the reperformance, which was not possible before. So, for instance, the future of audit, sampling could be history in 10, 15 years above. From 15 years now, we may be talking how much you have audited. You may be auditing the entire population. It is possible. It is possible with the artificial intelligence and the tools, and it's just a matter of time it could evolve. It's not there in the standard as of now, but it could happen. Inquiry. Inquiry is a very powerful audit tool. Okay, inquiry involves inquiring with personnel and others also. Okay, it's an important tool. A lot of audit, I can tell you, You inquire from one person to another person, you gather the information, it gives you a lot of input to your audit gathering exercise. For instance, if the accounting department, if there is a department of sales, then they are giving you information. You go and check the sales information with the finance department. You can corroborate, you can inquire how they check the sales information. You will get a lot of useful information for your audit. Inquiry is an important audit tool. It could be employed effectively. Now, what are the key aspects when gathering audit evidence? First, focus. Okay, we have got limited time, limited resources. Within that, we need to complete our audit. So the focus has to be on where the risk of material misstatements or risk of misstatements are there. It has to be focused. The focus has to be things which will mitigate those risks. We are not checking everything. Audit is not checking everything. Audit is a focused process in mitigating the risks which are identified. That's what my definition of audit will be. Okay. Now, other things which, other item which is very subtle, which you come across repeatedly in various inspections, is identifying the controls different from the process. Very often, we are lost in the processes of the clients. I'll just give you an example and think it over. Bank reconciliation. What comes to your mind? Is it a control or process? You will, I am not getting the answer from you, but I can tell you, many of you will think it is a process. It is a control. Okay. Is it a control? A control has to ensure that the errors are mitigated, errors don't take place. Like, does preparing a bank reconciliation mitigates the errors in the financial statements? Not. You can prepare a bank reconciliation. You can prepare all the variances. You can run up to 5 years, 10 years, differences between the books, bank, and the differences between our books. And we can go on preparing a reconciliation. You can prepare a reconciliation which can run into pages. Okay. But nothing will come out of it. You will tally the figures from the bank to your books. What does it come out of it? Nothing much. Then what is is it a control? It is not a control. Now, review of the bank reconciliation at appropriate level and taking action in respect of the reconciliation items is the control. For instance, if you have got items which are there, checks have bounced, checks have not been credited. Now you pass an entry, appropriate entry in the books of accounts. Okay. So you identify the checks which have bounced from the reconciliation and pass appropriate entry. That is actually the control. Preparation of the bank reconciliation itself is a process. Now, what is the normal common error or common pitfall in our audit is we get lost in the process and we check the processes. We check how the bank reconciliation is prepared. It's necessary, but it is only a first step. We need to go beyond the reconciliation to ensure that the reconciliation is being reviewed appropriately and appropriate steps have been taken arising out of the bank reconciliation. That is a verification of the control. This is an example like that. A lot of processes, we need to identify everything. Is it a control? Are we checking a control? Are we checking a process? This is a very subtle thing. It is happening in it can happen in a smaller entity audit. It could happen in a big audit. It could happen in multinational audit. Various regulators have pointed out in their inspection this issue in audit. Okay. Now, another thing to understand is inherent and unconscious bias when you are gathering evidence. We are all people who are not skeptic. If you are not skeptic, you are not a skeptic auditor, you will actually unconsciously gather evidence which are positive to ensure that the financial statements are appropriately stated and they are true and fair. What I will call, or you will actually be looking at positive evidences. Okay, you will be biased to get positive evidences. This is unconscious and inherent. Okay, it's not. It's ensure you need to avoid it. How will you avoid it? You talk in terms of risk. When you talk of risk of material statement, then you will not talk of identifying positive things. You will identify tests to mitigate those risks. Something can go wrong. My purchases are wrongly stated, could be wrongly stated. Okay, if that is the risk which you have identified, then you will be looking at tests, you will be looking at evidences which will mitigate that they are not wrongly stated. Okay, so you should always talk in the language of the risks, which is important. If you are talking in terms of purchases or appropriately stated, they are true and fair. Okay, you will inherent bias or unconscious bias to choose positive evidences and ignore the negative or not contrary evidences which may exist in the system. Okay, so that needs to be avoided for a quality audit. Professional skepticism I've done. Professional skepticism is all pervasive, right from the client or an audit which you take. You need to be skeptic whether you can take the audit. Okay, is the audit the client? What is the kind of risk which is involved in the client? Okay, the businesses. Do you know the businesses? Can I do the audit? Is it the systems are in place? If the systems are in place, is it reliable? Can I adequate work which I can do? Is it going to take a lot of time? Okay, then when you are gathering the risks, you need to be professionally skeptic. All these years, maybe a company which could be 50 years old, nothing might have happened. Okay, still you need to be professionally skeptic. Something can go wrong. Okay, that is professional skepticism. You can have the best of the people there, high integrity, got a lot of reputation. But as an auditor, you need to ensure you are not auditing them, you are auditing the financial statement. In spite of them, the financial statement could be misstated. Okay, that is the skepticism. Now, information produced by the entity. This is another important aspect when you are gathering entity. Why it is important to identify IPE? Very often we find it's something which is generated by, we check something, as I told you, we check the financial statement entirely from the information produced by the entity itself. Okay, now everybody, the regulators and everyone is looking at us, what are you doing? The guy has given you the evidence. The guy has prepared the financial statement. You are taking the financial statement from the evidence which he has given you. What sort of an audit you're doing? It's fair enough. It's very important. So any information which is produced by the entity needs to be corroborated. If this is not corroborated, it is negligent because you are relying on some information which is given by the entity, okay, without appropriately corroborating whether it is reliable or not. We need to ensure reliability of IPE, especially if it is in areas of significance, areas of material misstatement. Okay. Example could be, for instance, if you are checking the aging of debtors, the client has given you an aging report. It's not enough. You check the reports to the final accounts. It's not enough. You need to test how the aging report has been prepared, how the thing is generated from the system. If it is system generated, whether the controls in place are adequate or appropriate, there is reliable. That's the kind of thing which we need. The next item, which is something important, and it is very important these days, is something called related party transactions. Related party transactions are a different animal altogether. Related party, by definition, is under the control, or the company is under the control of that related party. They have got significant influence over or by those parties. So the transaction need not be at arm's length because both the parties are related. They can fix the price, they can fix the terms. Okay, it need not be at arm's length, it need not be at fair value. There could be various things. So in that scenario, there is more and more additional risks involved. So related party transactions need to be focused separately. The tests which you need to do is need to ensure is there a proper oversight? Is the audit committee which is involved reviewing it? Because audit committee has a duty to oversee the related party transaction. Is there an external evidence which is available? Is it comparable with external rates? All those tests which you normally may not do with other transactions may need to be done for a related party transaction. Okay. Audit sampling. Audit sampling is important. Okay. I will not go into details. Audit sampling should have an element of unpredictability or surprise. It needs to cover, it needs to satisfy the sampling technique in what you call a normal sampling. Okay. So there are simple tools which are available. You can put the tool, you can use the simple tools and generate a random numbers or random samples. Okay. There are various sampling method which could involve a value also. Okay, you can have a stratified sample. Efficacy. Also, sampling is also very important. And random sampling needs to be a part. An element of surprise is important. Okay, if the client, the company knows how do you select the sample. Okay, so you come and check the cash balance at the year end. If you want to check the system of cash is very good, you need to go on a surprise with cash. Okay, you need to be predictable. You can't choose a location every year. You need to have unpredictability of some XYZ location, even it may not be by rate size. Next aspect in an audit evidence, it's an appropriate audit review and supervision. Very often the audit work is done by an individual. It's not reviewed. It's relied upon for audit conclusion. That's very dangerous. Everything can go wrong. The person who is doing the audit work may not have the expertise, may not have the experience of doing the audit or knowledge doing the audit. It needs to be reviewed. The work which is done at the lower levels need to be supervised regularly to ensure the work is as per the planned work. What is planned is what is being done. Or is there a need to change the plan as per the audit work performed? There is a need of a review concurrently throughout the audit period, and the supervision has to be on a regular basis. No quality audit can be done if someone comes and review at the end of the audit or like to supervise at only at the end. You will find the audit work has been done, the quality you don't know. Okay, so it's a very important thing in an audit. Timeliness. Work needs to be done in the timeliness basis. For instance, if the physical verification is done on a particular date by the clients, we need to be present at that time for observing how he is doing physically. If we are trying to do the review of the physical verification of say inventory subsequent to his date, it will not be efficient. So you need to be a timely manner. To get a confirmation, there is a process and there is a time. So you need to send the request for confirmation much in advance. Planning need to be done much in advance. For instance, if there is an year-end audit, at least 3 to 4 months before that, you start doing the planning, because you need to understand a lot of things. You need time to review various things which are there, various risks which are there. Okay, various things which have taken place, changes. So timeliness is important. The other aspect, which is something different, is the going concern. Of late, it has become very important because we have now the new law in respect of these companies which are not doing well. Okay, a company can become bankrupt, could go into bankruptcy laws. Okay, suddenly, even some payments not being happening, barring your pandemic, they could refer to the insolvency petition. Okay, so in the past, going concern was long. Okay, the company can go down in a very systematic manner. Now it can go down very fast. Okay, going concern is important. We have got specific standard. if it is a going concern, what are the tests need to be done in every company, and especially the questions you need to ask the companies are not doing well. It's very important. This is an area when is the problem in an audit? When the company goes down, people come and do, oh, hey, the company has gone down, the audit has not been done properly. So going concern is very important in companies which are not doing well. So the focus has to be important. Now the auditor needs to appropriately report in a timely manner if there is a going concern issue. If he has not reported on a going concern issue and the company has gone down fast, then there is a lot of issues in audit which has been raised. Okay, so going concern is a very key audit evidence which need to be done. Now there is a different animal, and it is very, 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 what I would say, relevant for even smaller companies. Risk of management override of controls. Now, if you look at the auditing literature, there is not much which people can do. There are things which people there. Now, audit, you say rely on the control. Based on the controls, I do a substantive test. That's what we do. Okay, but there is one risk which is there, which is pervasive. All the frauds, most of the frauds which have taken place, you will find it's not some X, Y, Z who has done. It is a management which has done the frauds. The management has overridden its control and have done the frauds. So the risk of management override of control is a standard risk which need to be identified in all the audits. Okay. Now, how do you mitigate this risk? It's a very, very difficult trying because you can't rely on the controls, because the risk itself is that the management can override any controls. Okay, I can have an excellent control for year-end sales, but the management can override the system and can pass entries for sales. Okay, now how can you rely on your controls? So you need to have appropriate substantive procedures. You need to ensure what you can call exception. You need to look at entries which are not passed in the normal system, okay, which are like journal entries and others, which are not in the normal course, which are abnormal entries which are passed in holidays, entries which are passed only at the period end. Okay, you need to review thoroughly all those entries to mitigate this risk. This is an area, it's a very difficult trying to cross, but it needs to be focused, especially in our family-owned concerns where the management and the control of companies is with the owners. Okay, they can override the controls. It's not professionally managed. The risk is higher. Okay, so this is very important. Audit documentation. As I told you, it's not enough you perform an efficient audit. You need to prove that you have done an efficient audit. Okay, so audit documentation is important. It's more important these days than ever before, because there are lots of regulators sitting on our heads. They want to know whether you have done your work properly. The only thing which you can go and give it to them is your audit documentation. This is my file. This is what I did. Just see, this is what I have complied with. So the focus on documentation is very important. This is an area where there are a lot of gaps. Okay, because very often we have everything in our mind, right from the lower level staff to the partners. We have everything on our mind and we perform the audit. We do not put down in writing what we have done. Okay, that's important. Say risk. We might have identified certain risks, and based on the risk, you might have identified certain procedures. But it's important the risk need to be documented, that to show that you have done the work of risk identification as per the standard. Okay, so that is important. Now, what you need to be documented? There are two aspects to documentation. It has to be sufficient and appropriate to support the basis of your conclusion. When you take the financial statement, when you take your audit report, you need to go back to all your work paper to the planning to show that your conclusions are appropriate. Your audit work or supports your conclusion that your test which you have done is appropriate as per the auditing standard. The conclusion from the audit test are appropriate. There are no errors or errors that are immaterial. You have concluded appropriately, and a clean report is appropriate under the circumstances. So the report needs to be supported by the conclusions and the work performed, and that need to be documented. It has to be appropriate and sufficient. Okay, there has to be enough work done. There has to be enough documentation. The second thing is to prove that the audit was planned and performed as per auditing standard and the applicable legal provisions and regulations. We have got plethora of regulations these days. Okay, you've got Reserve Bank of India, you've got IRDA, you've got MCA, you've got NFRA. Okay, so many for peoples. There is a standard on identifying risk of material misstatement. How do I prove I identified it? Only from our documentation. Okay, so each standard talks about judgment. How do I prove I have exercised my judgment? That needs to be documented. This is very important. Very often we exercise our judgment, but we don't document it. Okay, so documentation is important. When I started my audit career 35 years ago, I was given a manual, and an old manual, and the first page was this sentence: work not documented is equal to work not done. If you have not documented work, it is equivalent to work not done. Okay, if this is being taken as your mantra, you will ensure that everything is documented appropriately. Okay, now what are the general gaps which you find in documentation? You will always find somebody is taking sample, somebody is doing the test, and then they document the sample selected and all. The gaps which are normally identified is in planning. Okay, you don't put a planning documentation in file. You don't have appropriate document for risk assessment. Risk assessment is the genesis of the entire audit, and every audit, the whole audit is driven by risk assessment, and that needs to be appropriately documented. You need to document that these are the risks I've identified. These are the work which you have done. This work and the conclusion supports mitigation of those risks. And I conclude based on this work, these risks are mitigated, and I conclude the financial statement and true and fair. This is the link which needs to be provided. If you do not document the risk assessment, all other document does not hold good, because you have not identified the base. It is like building a building without the basement. Okay, so that's very important, risk assessment. Now, what are the things? How do I document? It's a big challenge. Okay, these days you have tools of IT. You've got IT files. Fortunately, your IT documentation system documentation has been accepted with appropriate controls and appropriate checks if you employ them. So you can use an IT file. Okay, you can use a templated file. You can use checklists. You can do questionnaires. You can do automated files, etc. But what happens in practice in various things? In practice, what I have found is if you use checklists, if you use questionnaire, over a period, there is a mechanical, the people start ticking that without application of mind. No question has to be yes or no. People will say yes or no and then finish the checklist, but they would not have applied their mind. They would not have applied, they would not have done the appropriate inquiries. So your documentation or checklist or anything which you are doing should enable to ensure that the inquiry is made, something is written, so that the tick box approach, what do you call a tick box approach, is not followed. Okay. Now, the other thing which is not documented properly is the risks are identified, the works are done, there are conclusions drawn. Now, everything need to be linked. Okay, my conclusions need to be based on the work performed. The work performed need to be linked to my risks. Okay, and my audit report has to be linked to all these things. Okay, this link normally missed out in a documentation, so it need to be documented. Now, we normally document the client processes and we fail to document what is our work performed. This is a common error which people do. They will have a one-page documentation how the client is preparing the bank reconciliation and all. Okay, first thing they will miss out is how the client is reviewing the bank reconciliation. The second they will do how, as an auditor, I have verified the bank reconciliation process and the bank controls arising out of the bank reconciliation. That will get missed out. So you will have an audit documentation which is full of the client processes without much documentation of the work of the tests which are performed. So this needs to be guarded. This needs to be focused. Now, very important is to document the key areas, what I will call as key audit areas these days, okay? And what is a risk of material misstatement areas, which need to be documented in details, because you need to defend that you have done appropriate work in that area than anything else. Okay, you need to document the judgments done. You need to document the underlying support. The last but not the least, which is missed out, the file. The file should be in a shape that experienced an auditor can review that file without your help, without the auditor's help. You should be able to review. For that, referencing, archival, appropriate housekeeping, page references, all these things are important. A quality documentation is important for a quality audit. Now, compliance with accounting standards and regulations. I'm a part of FRRB for 7-8 years. Now, what do we do as a part of FRRB is basically take the financial statements and review the financial statements, nothing else. We only get the financial statement, annual report, and someone reviews this as a technical reviewer to ensure that the accounting the standards are followed, compliance is done from the financial statements only and the audit report. These are the two things which are there. So now the financial statements is what is available publicly, what is being prone to review by everyone. It's available widely. You can just click of the button these days. You can get most of the financial statements. Even non-listed companies, you can get the financial statements. Okay, so these are publicly available. Now, while the reader may not have the underlying details, he has got only the statements only to review and compare with the standards. Okay, so it's very important that compliance with the standards, especially the presentations, okay, are ensured appropriately. There is an extra care. If you look at our FRRB, there are various publications which are available. A lot of things which are found out is in respect of presentation. Okay, it could be presentation or of your accounting policies, presentation required as per the law, presentation which are required by the disclosure which are required by the accounting standards. These are the errors which are picked up because it's all evident in the statement itself. Okay, so it's very important that added attention is given those areas because anyone can pick it up. Okay, it's available to anybody. Second, the standards are not law. Okay, it's no longer the domain of us accountants. Okay, now what is this new risk which is because of this? Now, some bureaucrat who is sitting there in the regulator interprets our accounting standards and say, this is what is the standard. According to me, this should have been done. You have not done that. Okay, so it's very important that you document how you interpreted the standard. Okay, what is your interpretation and how it has been taken care. Now, when you interpret the standard, you need to ensure adequate care, consult. You need to go out and check whether your interpretation is appropriate. And it could be if it is wrong, then the whole thing could be wrong. Okay. Consultation is a process which you adopt whenever there is an accounting issue involved. Okay. You need to take support. You need to look at the literature. You need to look at what others have done. You need to look at what the institute has, any publications have done. Everything, wherever it is, the regulators have done something. All these things are important and need to be documented what you relied upon. Okay. As I told you, presentation and disclosures have to be thorough and needs item-wise check. You need to ensure that every item in the audit accounting standard, every item in your schedule 3 are ensured appropriate disclosure made. There cannot be any default on that count, because the risk of picking up that error is very, very high. Okay, I'm talking about now risk of errors in the accounts and audit being picked up is being very high by other agencies, not risk in the audit. Complete knowledge, the accounting teams and training and updates. The accounting standards keep on updating. Even the MCA updates their provisions. Okay, so there is a need of continuous update. Okay, CPE is not just for listening and getting a CPE credit. CPE has to be taken appropriately to update your knowledge in all the areas, including taxation, because you as an auditor, you need to ensure the tax laws are complied with. Okay, you need to have a base knowledge of tax. You need to update yourself on tax. Okay, if there are specific regulations, there are additional care to be made. I'm sure anybody who has audited NBFC and banks, their focus will be a lot on RBI regulations, because what the RBI, and there are now lots of issues with RBI regulation, with accounting standard, whether you follow RBI regulation, what do I do when the accounting standard varies? So many things are involved. Okay, now the regulators took almost quite some time to come out. Okay, so these are invariably inspected every year. Reserve Bank of India inspects almost every major NBFC, major bank every year. They draw their own conclusion. They actually look at whether the accounts have been prepared appropriately. They are actually looking at Ind AS. I have come across in the first year of Ind AS, they don't know anything about Ind AS. They looked at some other accounts and they say, oh, this account they have interpreted this way. Why you interpreted this way? They ask me. Okay, so they may not have the accounting knowledge, but they have the knowledge how to review, how to inspect, okay, how to compare things and then ask questions. Okay, so regulators inspect them, and especially their own regulations, they have their own interpretation. Very often in the bank inspection, what is brought out is Reserve Bank of India very often say their regulations have not been followed. Okay, the auditor would have taken account, the bank would have taken a different interpretation, and the auditor would have agreed to the interpretation. Whereas the Reserve Bank of India comes and tells, oh, this is not this interpretation of my own regulations. Okay, there is no appeal against it, because the Reserve Bank has prepared the regulation. Their interpretation is important. Okay, so it's very important. RBI and other regulations are concentrated, they're compliant, they're being focused if it is required. Likewise, IRDA. Okay, audit conclusions and reporting. This is a big gap. I have got my audit work papers. I have got various areas of audit. I have got my audit report. The link between those audit work papers and to the audit report is audit conclusions, and then the conclusion should support your reporting. This is an area where there are gaps. This is not very difficult to do, but invariably this part is being missed out. How do we do it? Okay, each area, each work papers, each one, a set of tests which are done, there has to be a conclusion which is being documented there. It's very simple. The conclusion may be there is no misstatement which has been observed. If there are some errors which are observed, these are the errors which are observed. Then subsequently, the errors need to be analyzed, either to extrapolate the error, or there is a need of additional audit sampling, or some other audit tests need to be performed. You need to follow up those errors. Okay, that needs to be documented. Okay, now the big gap is on this conclusions. Okay, documenting the conclusion in individual areas, and based on that conclusion, the final conclusion of the financial statements. This is a common gap. This is required. The conclusion is required. The standard talks about audit conclusions and reporting. Okay, so conclusion is to be documented appropriately. Okay, now how do I conclude? You evaluate and conclude the audit evidence based whether they are adequate and appropriate. As I told you in the past, whether if I received I have received, I have done audit tests on sales. Overall, based on the audit tests, whether my assertions which are there, all the assertions which are required are fulfilled and the audit risks is mitigated. Okay, that is what individual areas you document and you compile from the individual area to the final financial statement. You conclude. Based on the conclusion, summarize and analyze the exceptions of material misstatement. Please ensure you are very careful on any exceptions or misstatements. Very often, if there are exceptions, anyone can pick up the exception and misstatement or error. Suppose you are checking, say, 10 items. There is one item where there is a mistake. Okay, it is important you document, you analyze that exception, you analyze what needs to be done, whether you increase the sample size or you have to increase some other procedures need to be performed. You need to document, you need to use your judgment and then take it to its logical conclusions to conclude till you are satisfied. If you are not satisfied, if you are going to report it, take it to your report. It's important. Otherwise, an exception which are noted without follow-up is calling for gross negligence. Okay. Now, there is a summary of adjusted and unadjusted errors arising out of audit and analysis. If the client adjusts all the errors, it is good. But at the same time, doesn't mean that you stop it. You need to look at and extrapolate these adjusted errors. Is there more errors could be there or not? Is there anything more I have to do? So that's important to analyze. Okay. So unadjusted, if the errors are adjusted, does not mean that everything is perfect. Okay. So that is needed. This is where there are gaps. Okay. We fail to do that and there is a gap which are there. Management representation. I think there is a culture of getting management representation for anything and everything. Okay. And invariably regulators have been very strong on this management representation, even the standard. Representations need to be received. Okay. But they have their own limitations where you can verify, you can support your conclusion by audit evidence. You cannot replace the audit evidence by representation. As a practice, I would say, if you are relying only on management representation for certain conclusion, then there is an issue. I can tell you as a practical auditor, there is an issue. You need to be worried because it is not, you are not in a position to test and conclude for yourself and only rely on management representation. There is an issue. Okay. But management representation is necessary to ensure that the management has done its part of the work under the company law and the accounting standards. Okay. They have got a responsibility to ensure they have done their responsibility. And if there are some exceptions, they can also give you the exceptions. Okay. So that is very important. After this conclusion is your report. Now, the report is a very, very key thing. Okay. You have to be very conscious. At the output of an audit is an audit report. The audit report is your output which you are giving to everyone, including the shareholders, the bankers, the investors. Everyone has got your report. They do not know what you have done. They don't have your work papers. They just take your report and your conclusion, and that is what is important to them. So you need to be conscious of the report. You need to take due care of the report. Okay. First thing to be identified in the report is, do you need to modify a report? It could be modification or anything of internal controls. It could be on your audit opinion. It could be on CARO, anything, any items. Either it has to be unmodified or with some EOM paragraph or a modified report. If there are modified, there are again 3 clauses. Whether you qualified an item, you disclaim the financial statement, or give a negative report. Okay, so there are various options. There are standard reports. Stick to the standard reports. Stick to the examples given the standard to a large extent. You change it only to the extent which is necessary, because we find in FRRB that a simple errors are made in audit reports. The audit report might have changed, the CARO might have changed, they give old reports. Okay, so that's calling for it's a negligence. Okay, you are exposing yourself to a lot, and it's clear, sure, gross negligence. Okay. Well, another thing which is important is changes which are updates coming. Everything is getting changed. Car oil is getting changed almost every year. Okay, and every year it's confusing. 1 year they come out with it, they postpone it to next year. Okay, so you may actually forget by the time it comes. The institute educates all of us with updates regularly, but you need to be important. The auditor, the audit team needs to be aware of all the updates. It's important. Okay. If you ask me, what is the most important thing in an audit? There are two things which are important. One is the process which need to be followed meticulously. The second is use of judgment. Internationally, especially in US, there are US has a very rule-based approach to audit and accounts. Okay, all the big firms went into a process and say, look, we have got excellent processes. Okay, then the regulator came and said, boss, what is happening is people are mechanically following the process and they are doing away with their judgment. Okay, it become a mechanical. Mind is not being used. Judgment involves use of your mind. Okay, an audit involves the use of your judgment based on the phenomenal knowledge you have, your experience you have, all of them. Judgment is involved. If you read the auditing standard, every step of the standard, judgment is involved. It could be identifying the significant matter. It could be identification of risk, identification of materiality, type, nature, and extent and timing of the procedures. Review is involved. Okay. Now, judgment has to be backed up. Can I just say, oh, this is my judgment, and then be done away with? No. Judgment has to be backed up by sufficient data and logic. Okay. Now, this is the work I have performed. Because of the nature of the work, because of these things, I have concluded. Okay. That data, that logic need to be spelled out, need to be documented. This is a big gap. Judgments are generally not documented and you face problem. Okay, documentation of judgment in every area, if it is exercised, is a common gap. Now, when you have a judgment, there are two types of things. If you made an error of judgment, or did you make a gross negligence? Auditor can be hanged for gross negligence. Auditor can be punished for an error of a judgment. Okay, if you make an error of judgment, your punishment can be lower. Okay, well, this is theory, but in practice, what happens is something different. Okay, there is a thin line of difference. So you need to be careful that you are not making an error of judgment. Okay, because that could be treated as a gross negligence by itself. Even though if you read the case laws, they have identified error of judgment as different from gross negligence. Okay, so but it's a thin line of difference. Nowadays, the rule is changing. If something has gone wrong in financial statement, auditor is grossly negligent. Okay, people have coming to that conclusion without even doing an exercise, doing an inspection. Okay, and that's dangerous and need to be cautious. We can't do anything. They are regulators. They take action. Okay, you need to go and defend it. Okay, so everything you need to document. Your judgment also you need to document. Okay, at the highest level of court, you will get, oh, it's only an error of judgment. You are not grossly negligent. Okay, judgment has to be exercised by appropriate level of the audit team. At the lowest article assistant cannot exercise a judgment which is at a financial statement level. Okay, so it has to be with appropriate knowledge and experience. If someone doesn't have a knowledge how a sales, what is a sale, how the sales system booked, what is the sales system, he cannot make a judgment. Okay, someone who has got the expertise, who got experience, need to make a judgment. You can use the resources to do the work, but the judgment has to be exercised at a senior level. Again, this will be there in everywhere. Professional skepticism. Professional skepticism need to be used in professional judgment. Okay. Judgment has an enhanced use, has become much more difficult in these times of Ind AS. Now, Ind AS requires fair valuation. Everything, there is a fair valuation. Your revenue has to be recorded at fair value, not at the value of the invoice. Okay. Now, whether it is at fair value, it's very important. There are fair value valuations being done. There is a lot of judgment, lot of assumptions which are used in those valuation. Okay. An auditor needs to use his judgment on those valuations. These are all highly technical things. You need the knowledge of valuation. You need to involve valuation specialists to make the judgment. Okay. The other area where judgment will be there, estimates. Okay. The accounts is not perfect. Accounts is not, it's not accurate to the pie. It has a lot of estimates. All provisions are made an estimate. Every liability is estimated and put. Okay. There is an estimate involved. So whether the estimate has been appropriately made, there is a need of judgment. Okay. Judgment and processes are two main ingredients of a quality audit. Okay. Now, when I can't but help tell you, the people who judge us, who judge the auditors and audits, may not be auditors themselves. Very important. What is the risk involved? Your judgment as a chartered accountant could be different when they test your judgment. The regulator has its own judgment, his own way of thinking. His mindset is different. So be wary that the judgments will be questioned by someone whose judgment will be totally different from what you are having. Okay, so you need to be careful in exercising and properly documenting the judgment. Quality control. Quality control, yes, there could be a lot of things could be discussed tomorrow also. I don't know whether it's been done. Quality control does not mean it's the quality control review. Quality is all pervasive. It has to be predominantly achieved by the process itself. Now, I will always give an example. In a manufacturing process, if you are manufacturing process, if you are manufacturing a quality product, the quality has to be there throughout the manufacturing process, not just at the quality control. A bad manufacturing process cannot be made good by a good quality control. Okay, so quality control has to be achieved by the process itself. So each stage the quality has to be controlled. Okay, have you done a proper planning? Have you done a proper risk assessment? Have you identified the responses to every stage? Okay, there are certain things which are not at the individual audit level. It is at the each audit the whole. Ethical requirements. Ethical requirements and independence is what is attracting a lot of attention to everybody, investors, okay, regulators. There is a need of a framework to ensure that they are all fulfilled, especially by the audit team members. Suppose you are auditing a listed company. You need to ensure the listed team members do not deal in the shares. Okay, there could be an insider trading violation. Okay, so and ethical requirements requires you not to be independent, including the audit team members at appropriate level. So you need to establish procedures that independence regulations are followed, ethical requirements are followed. Please be sure your audit report contain a positive statement that the ethical standards are followed. The ethical standards have changed last year. They are now on par with international ethical requirements. It's quite wide, especially when doing non-audit work, holding investments and all those things. You need to ensure they are followed. It's very difficult to defend any violation of these ethical requirements and independence because most of them are factuals. Okay, it could be easily proved. It's very difficult to prove whether you should have done a particular audit test or not, appropriate test. But it is easy to prove that you have violated the independence and ethical requirements. So you need to be careful, and quality control has to be very good in that. Now, assignment of engagement teams. Audit is a teamwork. So you need to ensure that appropriate team members are assigned and appropriate team is assigned. A team which does not have any knowledge of a bank cannot audit a bank. A team which doesn't have a knowledge of, let's say, an industry like telecom cannot go and do a telecom. Now, you need to train them. If they don't have the knowledge, you need to train them. You need at a senior level, there should be more involvement. Okay. So this is very important. Assignment of engagement teams, direction, supervision, and performance. At the end of the day, audit is performed by people. People is important. What the people do is important. A work which is generated is work generated by the people. So it's important, the quality of the people, supervision of the people and their performance needed for a proper quality control. Reviews. This is a big gap. Now, anyone who is performing an individual audit can go wrong. If he does the test, he may do it wrongly. If he identified some conclusion, he may not document it. He may find it is not necessary, or if he finds an error, he may not see the significance of the error. Okay, so at a lower level, this can happen. Okay, and if someone has done, someone needs to review. Very simple. Someone needs to review who is senior to the person who has done the work. Every work performed has to be reviewed by someone senior. Without that, I don't think the proper quality control can be established. When can the review take place? The review has to happen then and there. Review has to be continuous. You can't review after the audit is over, review, because it's a post-mortem. At the time, you have to review, you have to give a report. You won't have time to do additional procedures. Okay, so review has to be concurrent right from the first day of planning. Okay, so it's important. Consultation. Consultation is very important for appropriate quality, because you may not know everything. You may not have come across all the situations. There are interpretations. There needs to be taken second opinion, second view. If there are challenges, you may need to consult on technical aspect. You may have taxation issue. You may have technical issue. You may have business related issues. You may have legal issues. You need consultations. Consultation is an important part of a quality. Where you need consultation, you need to look at it. Okay, you should not avoid consultation. Consultation, you can earn by doing more consultation than doing less consultations. Okay, it adds a lot of quality value. 2 minds, 3 minds, better than a single mind. That's the maximum. That's a logic of consultation. The other aspect of quality control is engagement quality control review, EQCR. Now, EQCR is important because you might have done an audit in the hurry-burry of the audit. You might have missed out something. You might not have done it properly. When you exercise your judgment, you might have a lot of pressures and all. You might not have appropriately done it. So it is someone who is independent of an audit at appropriate level need to have a quality review. He has to review not just the year-end accounts with your report. He has to, that was one we started, but now everything, especially the regulators, are placing equal importance on EQCR review. Okay, they are saying the EQCR review has got the same responsibility of the engagement partner. So imagine what's the work which the engagement quality control review partner or the manager has to do. He has to do review the key areas throughout the audit. He needs to be involved throughout the audit. Okay, he needs to be independent of the audit, because the independent actually brings in objectivity to the audit. The audit team is facing with the clients. They have a lot of pressures, a lot of difficulties. They have got time pressure. They have got cost pressures. Okay, they have got a client pressure. So many things. Okay, but a person independent of the audit team who is not having the pressure has to look at it, whether the quality control, the procedures have been done appropriately. Quality control is a key to any quality control in a manufacturing environment. Okay, those quality control will be on sample basis, but this can't be on sample basis. This has to be throughout. Okay, so it's very important. The regulators are placing a lot of emphasis on this quality control review by external reviewer. These are, in summary, what are the key aspects I would look at it as far as an audit is concerned. Okay, I've not covered everything, but what I've covered, what I felt important. Now, sitting today, what's going to happen in the future, or what's happening with the developments which are taking place? Oh, I can't but put this. there are lots of things that are happening. There is a paper which has been issued by NFRA a few days back. It's talking about not doing an audit for smaller entities. Okay, so people are looking at, so the question has been started, is audit necessary? Okay, so they say it's not necessary where there is no public interest involved, there is no bank borrowings, there is no outside shareholders, it's only the and the tax audit, there is a mandate required. If there is no tax audit required, we don't want another audit here. Okay, so there is a discussion paper which has been circulated. I'm sure in the near future, the audit for smaller entities may go away. Okay, so they are saying, so that's not good news for us. Okay, but in a way it is good. Okay, now what is the thing which you need to be conscious, which I want to highlight, is artificial intelligence. Artificial intelligence may actually take up predominant work of an audit. Okay, when I was told about 10 years back or say 7 years back that IT is going to make a significant difference to the way you do the audit, I was laughing at it. How can IT do it? Our audit means we need to check it. We need to give a report. But over the last few years, I have seen how it has changed. IT tools, data analytics, okay, they are not in the standard. They are not in the normal procedures of audit tests, but they have done a huge difference to the quality of the audit. They have enhanced the quality of the audit to a higher level. Okay, now people are working on artificial intelligence, okay, to do the audits. Okay, you will find the people will be replaced by bots. It's happening. It will happen in future. Okay, it could happen. At the end of the day, a senior audit team may be sitting and the bots may be used for the audits. The day is not far off. Okay, I don't see it's far off. It could happen because everything is automated. Okay, bots are better to do a audit where the bots are involved for processing, isn't it? Okay, so it could happen. Now sampling. The sampling may go, instead of sampling, you may have a recalculation and reperformance could replace. I have seen it myself. I have done it myself in financial sector. Okay, I've done more of reperformance. I've done a lot of recalculations. Okay, I've done quite a bit of analytics. Okay, it improves your quality level phenomenally. I have seen my clients coming and telling me to do the analytics because they have got some issue with some figures. Boss, you just come, can you do your analytics to confirm this figure is appropriate? Okay, that's a kind of satisfaction the analytics can bring to the table in an audit. Okay, they are not far away. So we need to update ourselves. Okay, identifying outliers through systems. You have a tool, you have some bot sitting on the system trying to identify. Suppose you want to know exceptions. They give parameters for the exceptions. They can identify those exceptions or outliers from the system. Bots can be used. Remote resources and teams. It has already started. If processing can be done, the entire world accounts are finalized in India. The world audit can predominantly be done out of India. It's happening. Okay, so the way we perform the audit has to change the way the companies are pooling their resources and doing the processing. Okay, shares and specialized services in audit. There are specialized, for instance, simple bank audit. Okay, bank audit, there is a documentation is all centralized these days in many of the banks. Okay, so there has to be a specialized, there is a specific audit of that shared service center to look at the documentation. It can't be a part of the branch audit. It's no longer part of a branch audit. So the audit needs to be tuned for the specialization. What I see more now is a greater interaction between regulators and auditors. When I do, for instance, in respect of banks and finance company, I have never met the RBI before 2 decades ago. We have never met them. These days, every year before the audit season is over, okay, the regulators, the NBFC in charge of NBFCs of banks, they call us. They call all the auditors or the banks and the NBFC, bigger NBFC. There are two different now. They are merged, and they give their perspective, what they are expecting out of it. What are the changes they have made? What are their key things which they are coming out in their inspections? this is actually a very positive thing. So your risk is minimized, your focus, your risk, they actually give you a risks involved. Okay, so it's a good thing. You can go back to the regulators in respect of interpretation. So there is no doubt, there is no difference in interpretations between you and the regulator. Okay, between the company and the regulator, between the auditor and the regulator. So there is quite a bit of interaction which is happening, which is very good. Okay, the other thing which is not so good is increase in oversight of professionals, essentially an audit. Now, pretty rough thing. Now, it is only the domain of the institute to oversight the professionals. It is now taken away. Institute is only a part of the oversight of their members. Okay, there is an NFRA in respect of companies. RBI has actually has passed regulation that they can actually take against the erring auditors. So they have having an oversight. Insurance regulator has got have oversight. SEBI in respect of listed company has got an oversight. So every regulator has got an oversight as an auditor. Okay, so it's very important. This is given. Okay, nothing we can do. It requires a lot of skepticism when you're performing the audit, a lot of due and care that someone who is not an auditor is sitting on top of you. Okay, that's very important. Increase of specialized skills and industry specialization. Slowly, I'm just seeing specialization within the audit itself is happening because the industries are becoming much more complex. The issues are specific to those industries. So within the audit itself, you are finding already specialization, industry specialists, which is a good thing. Okay, but it's a very difficult thing in practice, especially with a smaller firm, because you can't have specialists for each thing. Because if you get one audit, you will not get his competitor's audit. Okay, so specialization has got its limitation. With you may get it in rotation, but the specialization has got its own limitations. But at least a couple of industries, the 2-3 industries, the team has to specialize like that, so that the audit becomes more quality oriented, because you can't reinvent the wheel. Each team cannot go and reinvent the wheel every time. Then they will be all learning. By the time they learn, the audit will be over. Okay, that's what happens. Auditors need to be updated. Either you are updated or you are outdated. Okay, you need to update, you need to upgrade, all of them. The most important thing which I would say is the fees. Without a proper fees, you cannot do the work. We are not doing charity. Audit is not charity. Audit is a profession. Audit is in a way business for us. Okay, we need to be paid. There are people who are dependent on audit, people who are working, they need to be paid. So fees is important. It needs a lot of other expenses these days. IT investments in IT, investment in administration, so many things involved. So we need to look at the fees. Okay, that is also important. It's time the fees are upgraded. Okay, the regulator himself are eyeing and telling you guys are not doing a proper fees. You are not charging a proper fees. With this fees, they are saying a sufficient or a quality audit is not possible. They are very clear. Okay, so it's important to start with fees and other things. Okay, this is my thoughts, certain thoughts on which key aspects on quality audit. They are not complete within these 2 hours. What I felt was important, I have covered. If there are any questions, I can take it.
Posted here, sir. Any question directly posted to you, sir?
Chat is in the chat box. No.
Yeah, chat box and Q&A both are available there on the right side.
Chat box and
Next to the chat box, Q&A is there.
Q&A. No, nothing. No.
Okay. Regarding that NFRA notification, so President has come out with the video.
Yes.
Said that they have no authority to issue like that. It was never discussed in the board meeting of NFRA.
No,
outgoing chairman issued that statement. It is it is not a opinion of NFRA or anything like that. That's what the news came in now.
yeah,
So
possible.
all the members, he requested anyone wants to not to write directly to NFRA. If anybody wants to write to ICAI, president at ICAI. That's what
No,
he requested.
yeah. You should be at both ways. The president, you should write to the board. You should directly write to NFRA. Okay,
No, no.
because both I think we should do it. I will suggest we should go through the institute. I will send it to the institute, my views. I will also send it to NFRA also directly. If it is favoring the profession, what happens these days? How much is that the institute is being taken vanity? If they say members, okay, that could be a value also.
No. What president requested is, as here they have no authority to issue MSME and all. It is not their scope.
Yeah.
So without authority they have issued. So responding to that statement is not relevant. So if anyone wants to, any member wants to write it to ICI. We will consider that, and we will take ICI will take up the matter with the NFRA.
No.
That's what he said.
I will go and write to NFRA. You guys have no authority.
Okay. So, but
yeah. I'm a retired person.
So rubbing may not be required. So I think ICI will take care of our interest. Definitely, they are going to take care of our interest. I think that's what President already conveyed to all the members. So this just for the information of members available here. So then tomorrow we have arranged another important program, Audit Quality Maturity Model. I request all the members to register and pass on this information to your friends and colleagues. More and more people attend these audit seminars, audit conferences, audit meetings, so that we learn from the experts. That is what already Sundaresan sir mentioned. So I request all the members take this is much more serious. Whoever is not attending any updating the knowledge and signing the balance sheet, end of the day, all those consequences all the members needs to face. So I think we need to introspect ourselves, whatever the authority says or not. But as a members, as a responsible members, we need to learn and make a quality audits. That's what I think everyone expects. That's what already Sundaresan sir communicated to all of us. Thank you very much. We had a fantastic session, sir. I really enjoyed the session.
Thank you very much for giving the opportunity.
Panindra, please propose a formal vote of thanks to sir and the members.
So it was indeed very value addition to all the members who attended today's session. So on behalf of Bangalore branch and entire managing committee of Bangalore branch, I wholeheartedly thanks Sundaresan sir for your wonderful session and all the members who attended for today's session. Thank you one and all. Keep attending Gyanarjana Empowering Excellence web series. Thank you.
Thank you. I can log off.